Alrighty, folks, one rental at a time is a different channel because we bring on experts from across the landscape of real estate, mortgage, all of that. And our experts find us new burgeoning products, and we have an exciting one today. One of the things I think you're going to see over the next couple of years as lending tightens up is you're going to have some lenders focus in new areas where they frankly don't have competition. Yes, they are going to make some money because they are going to charge for this, but they will be offering something that some folks need. So, Mr. Stephen Dow, do the marketing thing for Velocity Mortgage and tell us what you found.
Okay, thanks. Again, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. And of course, just always super excited to be doing these videos with you. I look forward to them every week because it's always a fun conversation. But in any case, let's get it going.
Yeah. So one of the things that I think is coming, and I've talked about this in past episodes, is seconds. Why do I
Right,
think that's going to be important? Because again, I was featured in Fortune talking about rate lock-in, right? People have 3%, they're not moving, but there's equity
right,
there. They're not going to go
right.
after it. So one of the things that I see coming is people going after second mortgages because again, they're going
Right.
to leave the first locked in. So I know
Hmm.
you have recently found a second provider,
Yes.
whether it be for investments or owner
Or even the
ops.
primary residence. Yes.
Yeah, clearly, currently only focused on California, but I think this is a sign of what's coming. So
Right.
highlight what you found, because again, I
Uh-huh.
think this will help many people, or at least
I
provide
agree.
options. What is it?
Yes. It's a second loan. It's a 5-year interest only loan.
So a
No
balloon.
prepay. Right. There's a balloon.
Okay.
Um, but again, it's up to 70% CLTV, but no ratio. So basically, no tax return, no peso, no W-2. And at 8%, um, that's beating most HELOCs out there right now,
Mhm.
going full doc, I believe. So this is a pretty aggressive product. It's actually coming from a private investor, but yeah, they're sitting on some cash that they'd like to kind of lend out, and they see that this is a kind of untapped market because it just doesn't make it very competitive when you're going for some of these HELOCs. And the guidelines are so much tighter now. I just had somebody call me today that their local bank that they've had a long-standing relationship with just kind of like disqualified them for a loan, and then tried to get them to say, well, if you close this line of credit, then we'll do your other loan. So now they're just tightening up,
Yeah, it's going to
quantitative
get
tightening for sure.
really, really, really tight. Again, I think we
Yeah.
talked about this last week, if not the week before, folks. You've got to have multiple lenders in your bag because they're
Right.
going to tell you one thing on Monday and it could be different by Friday. So please do yourself a favor and
For
have
sure.
multiple. Don't be dependent. But I like this product. But let's kind of round it out. So 70% CLTV. So again, let's say you got a $300,000 property, you bought it
Right.
years ago, you have
Right.
150K at 3%. You're not getting rid of
Right.
that,
Hmm.
but you could go get 20% in that example, right? Because you're going to go up to
Correct.
70 total.
Right.
It's 8% interest. Did I hear that
Correct.
right?
Yep.
Fixed for
8%
five
interest
years.
only.
For
Correct.
5 years, there's a balloon,
Yep.
which means you'll owe
Yep.
the money at the end of that.
Hmm.
Um, there's obviously going to be some upfront fees. Talking about a BPO, that's a couple of $100 probably. It's not a full
Correct.
blown appraisal, but I have
Right.
to imagine, given this is private capital, there's probably
Right.
some upfront points.
Correct.
What are we looking at?
We're looking at about 4 points, typically. So it's not cheap, but
It's
again,
certainly not
no
cheap.
hassle. Yeah, it's fast. And I mean, even on, like I said, HELOCs right now are at least anywhere from about 2% or higher, something like that, I think, somewhere in the,
Yeah,
the, the 10 range. So at 8% interest only, no ratio in a
and it's
BPO, it
fixed.
makes it attractive.
Fixed.
Yes. And it's fixed.
Fixed.
Correct.
All right, so let's put 4 points on the list again. Like if you're going to go out and get, you're going to be under, the guidelines. You're going to get 100 grand. You're going
Right.
to pay $4,000.
Correct.
Okay. Just want people to realize what that is. Again, it's not for
Right.
everybody. It is only California, but for me, this is a sign of what's coming because I think what's going to happen is the lending gets tighter. You're going to have both private investors as this individual, but also Wall Street, if you will, or hedge funds or whatever you want to call that, deep pockets. They're going to find parts of the mortgage market not being served and they're going to
Right.
create new products. So that's why it's fun having a guy like you who's been in this business for so long because you're going to bring us new products. So thank you for that.
That's what I'm aiming to do. And it's just taking longer to kind of compile some, real players that without having to just offer what's already available out there as far as just, cookie cutter type stuff. So I'm trying to find really, um, innovative and relevant and impactful, products that, especially for the one rental at a time family, don't want to come to you guys with like, owner occupied stuff primarily. So I thought this would be an interesting product.
Yeah. Yeah. So again, folks, it's not for everybody. I would call it expensive 4 points. Again, I've paid 4 points before, but the deal's got to make sense. You got to have options. Please use the capital wisely. All of those things we normally talk about. But if somebody wanted to come scratch this, see if you could help them, how should they reach out?
Sure. Just email again to sdao@velocitymortgage.com. In the subject line, put the acronym ORAAT for one rent at a time. Body the email, basically what you're looking for. Property address would be great to make sure that we lend there. Your best phone number to reach you back at. And of course, if you could, put down your mid-FICO score, that is also helpful as well. And typically 24, 48 hours, I'll be in touch.
Awesome. Thank you so much. Great find. I think this one's, for me, this is a sign of what I've been thinking is coming is finally coming. I think there's going to be a lot of niche products coming. So thank you for this.
My pleasure. Thanks, Mike.
Mhm.